स्वर्ग सम संसार हो, अतः जीवन बन परमार्थ में व्यवहार हो। नाम करने के लिए हमको सभी से गर्ज है, गुरुदेव यह आशीष दे तो सोचने का फर्ज है। पुजारी गुरुदेव के आदेश धर्म के सत्कार में होती रजोटी राखी बिना की परवाह नहीं हो जाने की। होते न हो हम बुद्धि से हो विश्राम से भी तुम्हें और कृष्ण में वीर हूँ कि धीर हूँ उज्जवल सर से सदा निज धर्म रत गंभीर हूँ।
तन मन हमारा
So, thank you all. I request all to please keep quiet. Speakers. So, as you all are aware that today we have discussion on operating segments, and for that, as a keynote speaker, we have our speaker from Bangalore, from RGN Price, Aditya Kumar. I request Arusi to please introduce our keynote speaker today, and then we can start with. Arusi, please. Arusi, you are not audible.
Good afternoon, everyone. I am happy to have the opportunity to introduce the eminent personality having experience in auditing and assurance, CA Aditya Kumar S. Sir. He is a partner at RNG Price and Company Chartered Accountants. He has vast experience in auditing and assurance sector. It is a great honor for all of us to have you as our guest for this professional discussion, sir. And he merely requires an introduction, though. He has also worked as audit manager and audit assistant at RGN Price and Company and NM IGN Company. And lastly, I would like sir to please enlighten the articles with the words of wisdom.
So Aditya ji, before you start, I may just inform you that these Saturday classes are actually a weekly feature of the firm Kalani and Company. And here basically we keep on discussing a lot of subjects, technical subjects as well as other professional subjects, which actually are being prepared by the articles themselves, and they prepare their presentations and deliver it to the all other participants. And as a practice, I keep on inviting people like you who are expert in their domain area to be here as a keynote speaker. And we thank you for being here with us for this particular today's webinar on operating segments. And considering your expertise, I'm sure that each one of us will be having benefit out of the talk which you will have on Days 108. If I request you to please address all the participants, and as I informed you earlier also, we would like that you continue throughout the class according to the time, according to the your own convenience. So Aditya, please go ahead with your talk.
Thank you, sir, for inviting. All that I can say is I'm still a student of accounting and auditing, and we keep learning every day, and that process should continue. So is my screen visible, sir?
Yes, yes.
Okay. So I had prepared this slide under IFRS 8, and which is almost the same what we have for Ind AS 108 on operating segments. There is no material difference between these two standards. So since I had this material already available, I am using this for my session. So first of all, let's try to understand why we need this standard, or what is the background of this standard typically is. As an organization, yes, everybody is keen to know what is the profit or loss, which we call it as performance, what is the cash flows, what are assets and liabilities that we have, how has the company fared from the last year to this year, or if you would have to take a trend over a couple of years. But an entity which gives this results, ultimately its profit or loss or the net worth that you see, would be doing different businesses under the same heading or under the same name or under the same entity. So an entity may have multiple businesses, and you would like to know how has each business fared by itself. To make it very simple to understand, I always take this example of looking at our marks card when we finish our graduation or CA. You ultimately pass, but if you have to know in which subject did you fare well, which subject actually helped you to get more marks, you would have to go back and see the marks earned in each subject. So similarly like that, yes, the company did make a profit, but how did each of these segments, or how did each of these businesses fare? That is where the disclosure of operating segments come into the play. And starting from there, we also will look into what is the essence of giving these disclosures and how do we give disclosures? How will the company actually identify some of these as the segments that needs to be reported? It all goes back to the management as to how they actually look at the business, how they evaluate the results, and how they measure the performance of each of their businesses. Having invested money, having invested in infrastructure, they would also like to know which business is profitable, which business is not profitable, where should they take corrective action, how should they allocate the money or the resources for bringing up the business. So these are some of the critical factors that the management typically will have to think. Based on that, they will say, okay, this is how my business is improving. Should I put more resources into it? Should I supplement it by more facilities? Or on the other hand, if they find that certain businesses are not doing good, they may take decision to take corrective action to improvise it, or they may choose to wind it down also. So this gives an insight to the management as to how they look at the businesses. Right.
Aditya ji, I just wanted to confirm whether you are moving the slides or not.
I have not yet moved the slides.
Okay.
I have not yet moved the slides. I am just in the introduction stage.
Yeah.
So similarly, when I have invested in assets, management would be interested to know how much of assets have been distributed across various segments or various businesses, and especially when businesses are done in foreign countries and geographically spread, we would obviously like to know how much assets have been deployed outside India, what is its return. So all this analysis will be done by the management. Now, to whom does this apply? Typically, operating segment applies to all the companies to whom Ind AS 108 will apply, and specifically where the management looks at it as different segments. I will come to that a bit later. Now, when we call it a segment, we call this technically as an operating segment because if the business is surviving, it is surviving because of multiple components, and each component is an operating segment or an operating component. So what is a segment? Typically, a segment is defined as it's a part of an entity. It is one portion of an entity which has its own business activities, which earns revenue and obviously incurs costs to earn that revenue. And two important things is, apart from earning revenue and incurring cost, the management looks at its results very keenly. It looks at it and makes certain decisions. And to make certain decisions, the financial information that is required is also available discreetly. So discrete financial information about that portion of business should also be available. So it is not only one portion of business, that portion should be earning revenues and incurring expenses. That financial information of that business should be discrete, that is exclusively be available, and CODM, that is Chief Operating Decision Maker. This is a very important concept that we have to understand in operating segment, that CODM should review the results. So if these 3-4 conditions are fulfilled, then it qualifies to be an operating segment. Now, when we set CODM, who is a CODM? We call CODM, it could be the CFO of the company, it could be a group of directors, it could be a committee, but it is that person or that office which reviews the allocation of resources and certain decisions on operational and financial aspects. So depending on each organization, they may designate either the CFO or a group of people, group of directors, or they may have a committee who would review how much money has to be invested in each of these businesses and how they analyze each of these operationally or financially. So that position, technically, we call it as Chief Operating Decision Maker for the purposes of reviewing it and for the purposes of the operating segment. Now, once you define what is an operating segment, it is also important to understand whether all of them should be reported. You may have 10 different segments in a business, but should all 10 be reported? If it is possible, yes, it can be. But then, is it worthwhile, conveying this information to the stakeholders or to the readers of financial statements? Are all 10 so important that it has to be conveyed? No. So typically, these paragraphs, that is para 13 onwards, we call it as a reportable segment. What we do here is we prioritize the segments. Okay, I have say 10 segments in here. Now, is all 10 segment as important as everything else? No. So we prioritize them. How do we prioritize? We prioritize it based on how much it is contributing to the revenue or how much it is contributing to the profit or loss or to the assets. So the thumb rule that we use is any portion or any segment which contributes to 10% of the revenue or to the profit or loss or to combined assets, we call it simply as reportable segment. So again, you will have to get into a little bit more into it. To calculate this 10%, you would first have to see whether there are any inter-segments revenue, whether there is dependency on the information. So there are certain aggregation criteria that needs to be seen. So one, we started with the concept of why we need a segment. Second, we ended up understanding how is a segment identified? So it should be a separate portion, earning revenues and expenses reviewed by the management, and it should have discrete information. Okay, then we understood if that is the segment, whether all segments would have to be reported. Now we are saying no, we will have to first prioritize and then see how much of that is reportable segment in the financial statements. You are also given an option here where 2 or more reporting segments can be aggregated into a single segment if they're in line with the principles which are given in the standard. Similarly, if the total revenue, external revenue reported by the segment constitutes less than 75% of entity's revenue, then even if they do not meet the 75% criteria, we would consider it as a reporting segment. It means when you prioritize it, if you prioritize it in such a manner that if you put everything put together, it will be less than 75% of your revenue, you would still have to relook at it and aggregate other segments to ensure that at least 75% of the revenue is covered. Now, we have certain disclosures. Disclosures will be relating to what type of products or services are we deriving the segment from, right? How has the management applied the aggregation criteria? Then we look at for this business, what is my revenue, what is my expense, and ultimately what is the segment result. Segment result is for that particular portion of business, what is my profit and loss. However, there are certain expenses, there are certain income which cannot be put in a particular segment. So we call it as unallocated income or unallocated expenses, and we take it that as a general one and then arrive at my segment results. We also look at the total assets and liabilities for each of these segments. And before that, when we calculate the segment result, we eliminate inter-segment revenue. That means if there is a business that has happened between two different businesses, we will eliminate that because an entity cannot make profit of its own. So your segment result should not show that you made a good profit, wherein most of his business is coming only from your own entity. So we eliminate inter-segment revenues or inter-segment transactions and then calculate the segment result. When we do the segment result calculation, typically we say, okay, we arrived at total profit or loss. But let's also remember that there's a P&L account which shows total profit or loss. Should it match is the question. In the previous standard, yes, it used to match because we used to go from the P&L account and then prepare the segment. Many times that used to happen. Whereas under Ind AS 108, we are looking the business from the angle of the management. We are looking this statement from the eyes of the management. So in that case, what happens? The management may have its own criteria as to how to measure revenue. It necessarily need not be as per Ind AS 115 or it necessarily need not meet the accounting policies, right? So what happens, for example, the revenue of the company, the CODM measures it based on the value of dispatches that is being made or when the customer has actually acknowledged it. So they may have a different criteria, or the exchange rate that they may have used or they may not have used is also a determining factor. So the way the management looks at revenue and expenses not necessarily is as per accounting policy. What is required in accounting policy is what is there in financial statements. It is what is there in your revenue recognition principles. But when you look at business from the management perspectives, it could be different. Therefore, in IFRS 8 or Ind AS 108, they call for a reconciliation of the segment revenues or segment profit. One of the best examples that I can give you is once I finish this presentation, I will also show you the Wipro's accounts. If you look at Wipro's financial statements, it perfectly gives as to what is the profit or the loss or the revenue that the management reviewed and the reconciliation to what is been published. So we will also look into one or two publications to get a better understanding of how these standards actually play out. Now, what if there's a business where I say that I'm producing only one product or I'm rendering only one service? Should I still give a segment report? The old standard said you don't have to do that, but under the new standard, that is Ind AS 108, you will have to give this disclosure, what we call it as entity-wide disclosures, that even if there is only one reportable segment, you should still talk about it. If you do not have, you will have to mention that there are no reportable segments, and the only reportable segment is what the product or service that they are selling. And you have other disclosure requirements, like for example, information about transactions with major customers. So if any customer is contributing to more than 10% or more of your revenue, you will have to disclose. You don't have to disclose the name, you just have to mention there are one or two customers, whatever it is. This will actually lead to another reading as to what is your risk of business. Suppose if there is one major customer which is contributing to 50-60% of your business, that means your risk concentration is very high. You are depending only on that customer. If that customer does not come back, then you have a risk of the business failure. So this type of segment information will also give a lot of other insights to the readers of the financial statement. Right. Then there's a small comparison that I have made between AS 17 and Ind AS 108. The basis of identifying the segments earlier was on the concept of risk and return of the product or services, and we had the concept of primary and secondary segment. Whereas under Ind AS 108, we are looking from the eyes of the management, so we just have only one segment report. Then basis of reporting, the segment reporting was based on the accounting policies. That means it used to come from the balance sheet or the P&L. Whereas for Ind AS 108, you take the data independently and then reconcile that with the financial statements. So that is the major difference. Entity-wide disclosure and disclosure on customer contributing to 10% of more revenue was not required under AS 17, but it is now required under Ind AS 108. With respect to interest income and interest expense, which was included as part of the segment expense, now we are looking at it as to be disclosed separately, and if it is included in the assessment of profit or loss in each segment. So you will have to do a little bit deep dive into whether this can be allocated or not. Then disclosure of assets outside India, it was depending on the basis of identifying whether your primary segment was geographical segment or product segment. But here under Ind AS 108, irrespective of how you classify it, certain information like disclosure of assets outside India will also have to be given in the financial statements under the segment reporting. Now we have certain practical aspects which during the course of today's discussion we can look at it. When I say management, the way they look at it, where is it documented? So does the board minutes or other documents actually reflect that these are the segments that are being reviewed by the management? More often than not in audit, we have this issue that many times what happens, they feel that segment reporting is more a spreadsheet, or is just an arithmetics. As long as the numbers match, it is fine, but it is not so. You will also have to see whether this classification of business segment or reporting segment is also reflected in any board discussions minutes, how the directors have actually reviewed the business. Second, if you look at the director's report, management discussion analysis, we have also seen many companies reporting segments there, but they fail to report segments in the financial statements. Right. So this is a disconnect that also needs to be considered. Third is when we look at the concept of impairment of assets or a group of assets, question is, can that be a segment? Answer to that could be yes or no, because under impairment, we look at impairment of cash generating unit. But can a cash generating unit be a segment by itself? It is possible. We can discuss about that. We also have to look into certain disclosure requirements which are given under Ind AS 115 and the operating segments, because the way Ind AS 115 requires us to classify revenue point of time, over a period of time, product versus services, right, depending on the contract terms, whereas segment reporting revenue is described or allocated in a different manner. So therefore there has to be a reconciliation. I would say that there's a reconciliation required between three things. When you talk about operating results, the operating results given in the segment reporting vis-a-vis P&L account, right? Similarly, the revenue that you have disclosed in segment reporting vis-a-vis P&L account and vis-a-vis what is given under Ind AS 115, right? Then we also need to look at whether how the CODM is looking at the segment or choosing the segment. Should it be given as a significant accounting policy, or should it just be given as a note as to how the accounting policies will cover this? We also need to understand the issues when certain businesses are being acquired or certain businesses are being sold, whether it is going to be a part of the segment or it's going to be a segment by itself. Is it going to be discontinuing operations? These are all the other aspects that we can discuss. There is also a requirement when we talk about giving segment reporting in standalone financial statement vis-a-vis consolidated financial statements. So in the scope paragraph in the standard, it is very clear that if you are giving segment reporting in a consolidated financial statement, and as long as that consolidated financial statement is part of an annual report or the financial report where standalone is also there, then segment reporting in consolidation is enough. We don't have to give it to standalone, but there's nothing wrong if they give it. Then what will happen if I change my business, if I change my segments, or if I change the way they look at business? That is also one of the practical issues that we need to discuss or we can deliberate in the discussion. And we also have to look at interrelationship with other standards when it comes to cash flows, changes in accounting policies, income tax, revenue from contract with customers, financial instruments if there are any. So there is some interplay between these standards also that we need to look at it. So some of the annual reports I have, we can look at it, and my primary source of material has been the IASP material and the IAS Plus. So let me just open the one that I have, and I wanted to show you as well. See, this is the segment reporting, which I'm saying this is from Wipro's annual report. Hello, can you hear can you see my screen, sir?
Screen. We are able to see the screen.
Yes. So I'm not saying this is right or wrong. This is just a reference material. This is the consolidated financial statements from Wipro. So this is how they explain how they give something as segment. So they have IT services, IT products, and India state-run enterprise as a segment. And within IT services, they have America 2, Europe and Asia, Middle East. So this is how they have given subclassification, including banking, financial and health services, health BU, energy and natural resources, etc. So if you look at the way they have constructed the segment reporting, if you see here, they have given IT services, IT products, ISRE. These are the 3 or 4 major segments under which they have sub-products, Americas 1, 2, Europe, APMEA total, and there is something called as reconciling items, right? If you see this reconciling items, so under this table they have explain what are these reconciling items. Includes elimination of inter-segment transactions and other corporate activities. Revenue from sale of company-owned intellectual property is reported as a part of IT services. For the purpose of segment reporting, the company has included impact of foreign exchange gain net of so much respectively in the revenues, but which is not correct. It is to be reported as part of other income. So that is why I said when they prepare the financial statements, the management may choose to review the financial statements or information the way they want it, which necessarily need not be as per accounting standards. Therefore, when they prepare the segment reporting, they prepare a reconciliation statement to explain how the management has looked at the financial statements and how the management or the stakeholders are looking at in the annual report. Similarly, if you see this point, other operating loss of 81 is included as part of IT services segment results for the year. So this is how they are closing the financial statements. I just wanted to show another one. I'll just stop the presentation here and include a new file. Of course, this is not under Ind AS 108. This is a US GAAP accounts, and this is from Boeing, I think. So if you look at the results, here you have GAAP earnings and non-GAAP earnings, right? And that is how they have given the information. So even in other parts of the world, in other geographies also, the segment operating profit or loss is again given based on the way the management looks at it and finally reconciles it with the way the financial statements are given. So these are some of the annual reports that typically I refer for the purpose of understanding how other companies are doing. Just have the last one here. So just to understand, certain companies have complicated segment. This is from General Electric Industrial. So if you look at, they have both profit, operating profit, they have also disclosed margin, and they have given power, less acquisitions, less business dispositions, less foreign currency effect. So for each segment, they have given powers, renewable, aviation, organics, healthcare and others, biopharma. So just another example as to how complicated certain segment reportings could be across the world. So this is just two or three that I have the samples. So this is where I end my keynote address. Would be happy to take any questions and look forward to hear from others as well.
Yeah, in fact, Aditya ji, you have explained the entire Ind AS 108 in a summarized way, and I think almost touched upon each and every aspects of Ind AS 108, and also explained that how various companies, Indian companies as well as certain global companies like GE, are reporting on the Ind AS 108. In fact, while looking to the this GE's financials, I have seen that this company has reported profit margins also as part of their segment. So I believe that Ind AS 108 or IFRS 8 probably does not say about reporting of the profit margins. I'm not sure that how this particular column has been included in the Ind AS 108. Can you just explain on that? Or it is just a practice which they have opted for? We are not able to hear you.
If you look at the presentation or the file here, sir,
Yes,
they've
yes.
mentioned it as non-GAAP measure. So this is again additional information that the company is giving this to disclose how much of a profit margin they are making in each of the segments.
Yeah, so basically they have clarified that it is not the requirement of Ind AS 108, but we are disclosing.
Yes, sir. Yes.
Or IFRS 8.
Yes,
Yeah.
sir.
I think
I will also show you one more example, sir. Maybe that can be of much better understanding. So if you look at this again, an US-based company, this is Boeing. So they have given profit operating margin. So this is the requirement under maybe the US laws where they are giving revenues, less earnings, operating margin. So, but concept remains the concept remains the same, that people are looking at each business and how each business is faring when it compares to the total business.
true. So thank you, Aditya ji, for being with us, and I'm sure you are also continuing to
I'm continuing.
support and guide our students. So our students have also prepared the entire topic in detail, and not only that, they have covered certain observations of NFRA also, particularly in case of Mahindra Resorts, where they had made certain observations. And apart from that, certain observations are also made by FRRB, particularly on Ind AS 108. So
Correct.
we have a detailed discussion now on Ind AS 108, and first discussion would be by Vansika Jain, and followed by Shruti and yes, Mundra. So Vansika, you can now share your presentation.
Good afternoon, everyone. Hope you are doing well. The topic of discussion for our today's Saturday class is in AS 108, that is operating segment.
Is she audible to all of you?
So this is by
It's
large a disclosure.
Okay. Yeah.
So this is by large a disclosure in AS, and operating segment basically acts the operating segment report. Basically, it acts as a moderator or a reconciliation between the management report and the financial statements. And it not only enables the management but also the external users to understand the performance of each and every segment and assess their performance. The flow of today's discussion would be as follows. First, we'll discuss about the identification of the CODM, that is the Chief Operating Decision Maker, and the identification of the operating segments, followed by the determination of reportable segments along with the aggregation criteria, concluded by the disclosure requirements. The core principle of Ind AS 108 is that an entity shall disclose information to enable users of its financial statements to evaluate the nature and financial effects of the business activities in which the entity engages and the economic environment in which it operates. So as I said earlier, it's basically a disclosure standard, and it requires every entity on which Ind AS is applicable to disclose information in its financial statement about the nature and financial effects of the various business activities or the product line in which the entity engages, and the economic environment, which we can also understand as the geographical areas. So as per the core principle, a segment report needs to be presented in the notes to accounts and not the main financial statement. Ind AS 108 is based on the premise that information about the entity's operations prepared from the perspective of management will be useful to users to make meaningful investment decisions. So earlier in AS 17, that was for segment reporting, the segment report was prepared as per the returns and risk and return approach, and it was not as per the management point of view. Ind AS 108 enables us to view the report from the eyes of the management so that the users can understand the report in the way the management wants them to. Accordingly, the objective of segment reporting is to help users of financial statements to better understand the entity's performance, better assess its prospects for future net cash flows, and make more informed judgments about the entity as a whole, as the whole Ind AS 108 works from the eyes of the management. The scope of Ind AS 108 is Ind AS 108 applies on all the entities on which Ind AS is applicable. The scope exclusions are that if a financial report contains both the consolidated financial statements of a parent that is within the scope of the Ind AS as well as the parent's separate financial statements, segment information is required only in this CFS. That is, if an entity is preparing both the SFS and the CFS and it is disclosing the segment report in the CFS, then it may not disclose. It's optional that if they want to, they may not disclose the segment report in its SFS. But if an entity is only preparing SFS and not a CFS, then they have to mandatorily, and if Ind AS is applicable, then they have to mandatorily show segment report in their notes to accounts. Another scope exclusion is that in case an entity operates in a single business in a single geography, no separate segment report is needed. However, this fact needs to be separately disclosed in the notes that there is a single line of business and in a single geography. Say there is an industry, a manufacturing unit in Jaipur of mineral water, and they just operate in India. So there is only one geographical geography and a single line of business, that is mineral water. And Ind AS is applicable on that entity on the manufacturing unit, then they may not show segment reports separately, but they have to disclose this fact in their notes that there is only a single line of business within a single geography, so their financial statements are enough and no separate segment report is required. Companies to which Ind AS are not applicable but voluntarily opt to disclose segment information, in that case, the entity has two options. Either comply with all the requirements of this Ind AS or provide selective disclosures without using the term segment information. Means the entities on which Ind AS is not applicable, but they voluntarily opt to disclose segment information for better understanding of the user. In that case, the entity has two options. They can either comply with all the requirements of this Ind AS. They can't leave any information or any disclosure. But if they are only providing selective disclosures, then they have to do so without using the term segment information. This is the annual report of Reliance Industries Limited for the year 21-22, in which they have disclosed segment report in their notes to accounts. So basically, what they have done is they have shown the reporting segment. There are oil to chemicals, oil and gas, retail, digital services, and financial services. These are the main 5 reportable segments that they have shown in their segment report. Also, there are some unallocable assets and liabilities and revenues and expenses which are not shown separately under a particular segment, but they are shown as a total. As we can see, this segment, all the segments on the top, we have all the major segments, and there is others which includes a large part of the entity. Also, there are some unallocable expenses, but under all the entities, we have the segment revenue from each entity, which includes the external turnover. The inter-segment turnover means within the segment if they have done any transaction and earned any revenue. The value of sales and GST, there are unallocable expenses which are shown as a total in the whole on the right hand side, which includes the finance cost, the interest income, and other profit for the entity as a whole. Now, a thing that was different in AS 17 from in AS 108 is the addition of CODM, that is the Chief Operating Decision Maker. So that CODM is basically a function and not necessarily a person. So it can be the management board or the CEO, etc. So the CODM is the highest operating authority who looks after the operations of the entity, who is responsible for allocating the resources and assessing the performance of the operating segments. Generally, the CEO or the COO, that is the Chief Executive Officer, and the Chief Operations Officer can be the CODM. However, the CODM is not linked to a single title or designation. An executive panel, a board of directors, they can also take the above decision and can be considered as the CODM.
So it is not that only some individuals will be a CODM or any person who is on a particular designation is a CODM. A group of people or maybe a board of directors, these they may also be a CODM for the purpose of Ind AS 108.
Now, the main heading of this Ind AS, that is operating segments. So, what comes under operating segments? Then, an operating segment is a component of an entity, that is a part of an entity, and that component has to fulfill all these three conditions to be called as an operating segment. First, the component of an entity that engages in business activities from which it may earn revenues and incur expenses. Second, whose operating results are regularly reviewed by the CODM for a resource allocation and performance evaluation. And third, whose discrete financial information is available. So, the first condition, that was the revenue generation condition, here it is that the segment might not necessarily earn revenues from external customers, and therefore, even if the segment provides only the services to the other segments of the company or makes products for other segments of the entity, it is still the operating segment. Of course, if it fulfills the other two conditions. So a typical example is when a parent has some subsidiary in some country and that subsidiary makes products and sells fully to the parent company and it has no external revenue, then also it would be considered as an operating segment as long as the other conditions are fulfilled. Now there is an explanation given in para 6 of the Ind AS. It states that every business activity is not necessarily an operating segment and clarifies that corporate headquarters or some functional departments like the internal audit, which do not earn revenues or may earn revenues that are only incidental to the activities of the entity, would not be operating segments. Example, rent, interest, dividend, etc. This means that every segment of an entity is not an operating segment. It has to earn revenues that is based on the operations of the entity and are not just incidental to the activities of the entity. Suppose we have the headquarters office. So it earns revenue. It may or may not earn revenue, but if it earns revenue, that is only incidental to the activities that the overall entity is undertaking, and therefore it would not be included as an operating segment. Entities may incur expenses on centrally managed initiatives which are attributable to the entity as a whole and not attributable to any operating segment. So as we saw in the the integrated report of Reliance Industries Limited, there were some unallocable expenses which you cannot allocate to a separate segment and they have to be thus shown separately. Example, like the CSR, the management expense of brand, explanatory costs relating to new business opportunities, etc. So the entity may elect to report such expenses under unallocated corporate expenses with an appropriate disclosure note, so as long as such reporting is consistent with the manner in which operating results are reviewed by its CODM. So like an entity which is required to do the CSR activities, you cannot allocate the CSR expense to a particular segment of that entity, and therefore it would be shown under a separate heading of unallocated corporate expenses. Now, the condition of revenue generation, there is an explanation given in the India that it is not necessary for a corporate to earn revenue to qualify as an operating segment if other conditions are fulfilled, such as the costs incurred are reviewed, that is the second condition, and the discrete financial information is available. When operating, it is not necessary for an operating segment to earn revenue in the present, even if it has the ability to generate revenue in the future. It can be termed as an operating segment as long as the other two conditions are fulfilled. So, an operating segment may engage in business activities for which it has yet to earn revenue. For example, the startup operations may be operating segments before even earning revenue. Further, where revenue
रेवेन्यू होना जरूरी नहीं है. अगर कोई दूसरी कंडीशन सेटिस्फाई हो रही है, एसेट वाली हो रही है, तो then also that can be an operating segment.
Further, where revenue information is representative of operating results and the cost involved is insignificant, or where review of only revenue only may be sufficient for CODM to allocate the resources and performance assessment. In such cases, business activity can be treated as operating segment. So, if we have only revenue information about a particular segment and the CODM reviews only the revenue information for resource allocation and performance evaluation, as long as the other two conditions are fulfilled and there is discrete financial information available, if only revenue information is available and not a separate segment balance sheet is available, then also that business activity can be termed as an operating segment. The explanation of condition 3, that was the availability of the discrete financial information. So, discrete financial information refers to separate financial information available to the CODM for assessing performance and allocating resources to the segments. It is crucial for a component to be an operating segment, as it should be detailed for the CODM to make informed resource allocation decisions. So, why is discrete financial information necessary? Because a CODM for evaluation or assessing the performance of a particular segment, he has to go through the information about a particular segment, and for even the users, we have to know the financial information about each and every segment for decision making and judgment. A segment balance sheet may not always be necessary to determine if discrete financial information is available, as some components may not have discrete financial information, making them not qualify as operating segments. So, as we discussed earlier, that every segment of an entity is not necessarily an operating segment, and therefore, if discrete financial information is not available, that entity would not be qualified as an operating segment. In many instances, a specific component of a business, say the research and development unit of a company. Now, you can't allocate the research and development expense for each and every particular segment, and that would also come under the unallocable corporate expenses. So, the research and development unit, it may not have discrete financial information, and hence it would not qualify as an operating segment. Now, a little activity for you guys. Are activities conducted through joint ventures or associates considered under the definition of operating segment?
Saranya.
Okay. So, if the activity is conducted through joint ventures and their revenue is available and CODM uses the information for its review of decision making and resource allocation, then yes, they can be termed as an operating segment because the discrete financial information is available, and obviously revenue data mostly we have of all the segments that are there. There is no separate heading of primary and secondary segments in Index 108 that was in AS 17, but for a better presentation of the segment report, this approach is followed under Index 108, that is to enable the users to view the entity from management's perspective. The identification is based on the CODM test, that is, if a CODM regularly reviews a segment in his internal MIS report, then it would be treated as an operating segment. Now, in case there are multiple MIS reports covering the business and geography, the one of the above would be treated treated as primary, which would have a detailed reporting in the notes to accounts, while another would be treated as secondary, which would have a summarized reporting. Now, this list may be used to identify which are the primary segments and which are the secondary. The frequency of MIS reports being reviewed. So, if the CODM reviews the MIS report of one of the factors more frequently than the other, then that would obviously be of the higher importance. So, higher the frequency, higher the importance. Secondly, we can also look at the organization structure, that is the internal management structure. Segments whose managers have close proximity to the CODM as per the organizational hierarchy are considered to be more important segments. Accordingly, as I said earlier, there are no primary and secondary segments as per Index 108. Now, for better understanding of the organizational hierarchy, here we have an example where we have CEO followed, then there are presidents of the automobile and FMCG sectors who directly reports to the CEO, while we have the VP of Asia and Australia for both of these product lines. As you can see here, the proximity of the product lines is they are more closer to the CEO than the heads of geographies. Therefore, they have to report the primary segment would be the business lines, that is the automobile and FMCG. In this case, we have the president of Asia and Australia, followed by VP of tea and coffee. Here, the geographical segments are of more importance as they are directly reporting to the CEO or the CODM, and therefore their segment report would be based on geography and not business line. So, based on what we saw earlier, Entity A and Entity B both manufacture and distribute furniture and electrical products used in residential and commercial units. Entity A is structured such that decisions are made and performance is evaluated on a regional basis, that is India and Singapore, whereas Entity B makes decisions and evaluates performance on a product line basis, that is furniture and electrical products. Now, should Entity A and B report similar operating segments? Entity A should report operating segments based on region, and Entity B should report operating segments based on product line. The management approach requires the identification of operating segments on the basis of operating results that are regularly reviewed by the entity's chief operating decision maker in order to allocate resources to the segment and assess its performance. So this shows that are in the same industry can have very different operating segments because each will determine their operating segment based on how its CODM makes operating decisions and assesses the performance. Another FAQ we have here is that X Limited is engaged in the manufacture and sale of two distinct types of products, A and B. There are two different types of products, A and B, and they supply their product in both the domestic market in India as well as in Italy. There are two regional managers as well as two other managers for geographical areas and for the product lines. So we have similar importance given to both the product lines and the regional managers. Plus, we have two products, A and B, and there are two regions, the geographically, that is India and Italy. The defining factor here is for internal reporting purposes, X Limited provides information product-wise as well as the geographical location. The CODM monthly reviews the operating results of the product and annually reviews geographic performance. How should X Limited identify its operating segments? So in the given case, product results are reviewed monthly, whereas geographical results are reviewed annually. This indicates that there will be a greater importance of product, and hence product A and B would be treated as primary segments, whereas India and Italy can be treated as secondary operating segments. Obviously, both of the information would be available in the notes to accounts, but greater importance would be given to the product line as compared to the geographical areas. For further discussion, I'd like to call Yash.
So before Yash starts, Aditya ji, do you have anything to Do you want to further support our first speaker?
No, it was a good presentation, very vividly explained how the segment reporting works and how practically we need to look at things. It was a good presentation.
Thank you.
Thank you.
Yes, yes.
Thank you, Vanshika. As you have all must have understood by now, Vanshika has covered up till paragraph 10 of this standard. Continuing further, let us take an overview of the paragraph which I will be dealing with. Paragraph 11 of the Indian Accounting Standard 108 operating segments deals with reportable segments. 12 contains the aggregation criteria. From 13 to 19, it gives us about the quantitative thresholds to be considered. The 20 and 21 tells us about all the disclosures. The 22 tells us about general information, and the 23 and 24 tells us about the specific information about profit or loss, assets and liabilities of the entities which needs to be specifically disclosed. Now, as you have all understood about the operating segments, let us now understand what makes an operating segment reportable. An entity shall report separately information about each operating segment that has been identified in accordance with paragraphs 5 to 10 or according to the aggregation of the segments in accordance with paragraph 12 and exceeds the quantitative thresholds in paragraph 13, which will be covering further. Let us speaking of the aggregation criteria. Aggregation means clubbing or adding up two different segments, but they cannot be done haphazardly. There are certain conditions and circumstances to be taken care of. When operating segments exhibit similar long-term financial performance when having similar economic characteristics. While the standard expressly tells us this, it does not define what similar economic characteristics are. The similar economic characteristics depends from entity to entity and from circumstance to circumstance. The standard but gives us an example that if the segments are having similar economic characteristics, it can be deduced from the fact if they have long-term gross margin similar to each other. Now, the aggregation criteria consists of three different criteria to be met. The first one is it should be consistent with this Indian accounting standard. Second, segments having similar economic characteristics must only be aggregated. And third, similar in other aspects, which we'll be dealing now. There are 5 different other aspects expressly mentioned. The first of them is the nature of products and services. Now, what do you mean by that? Nature of products and services can be defined if they have similar rates of profitability, similar degrees of risk, or similar opportunities of growth. Second, we have nature of production processes. The similarity here can be assessed in terms of raw material used, the labor used, the sources of power generation, and other factors. Type of customer for their products or services. These can be included here. It can be included the sales promotion scheme or marketing schemes used by the entity for attracting customers for buying their products and services. Fourth contains the methods of distribution of goods or providing services, whether the entity has a factory outlet, a retail outlet, or deals with its the following goods or services mainly through online. Fifth, the nature of regulatory environment, which is the banking or the insurance. Here I can give an example. If an entity has some units of mutual funds or some financial instruments and it is regulated by the NBFC guidelines by the RBI, then a separate segment can be reported. Now, we have mainly dealt with the non-financial criteria to be met. Now coming to the financial criteria in which we can assess whether the operating segment becomes reportable. The first criteria, it tells us if the sum of the external sales and the internal sales of a particular segment is more than the 10% of the combined revenue of the total entity. External sales means to external customers and internal sales here refers to inter-segment transfers. Or if the profit or the loss of different segments is greater than 10% of the maximum of the profit or loss of the entire entity. Here it must be taken note that the whichever amount, whether profit or loss, must be taken in absolute amounts and uh, not with their positive or negative sign. We also have an illustration further which will help us understand this better. The third criteria is if the segment assets of the particular segment is more than 10% of the combined assets. I also want to stress on the fact here that it is not necessary all the three criteria must be met, but even if the segment meets any one of the criteria, then it becomes a reportable segment. Coming up, we have some further disclosures here, which tells us which the entity must make. An entity may combine information about operating segments that do not meet the quantitative thresholds with information about other operating segments that do not meet the quantitative thresholds to produce a reportable segment. If there are two segments A and B and both do not individually meet the criteria, but if they have similar economic characteristics, they can be clubbed together and then their quantitative thresholds can be determined to see the fact if they are reportable or not. Next, if the total external revenue reported by the operating segment constitutes less than 75% of the entity's revenue, then the operating segments which do not meet the reportable segments criteria can also be separately disclosed to so that we can meet this figure of 75% of the entity's revenue, which is disclosed separately in the notes to accounts. Information about other business activities and operating segments that are not reportable shall all be combined and disclosed in all other segments category from other, which must be disclosed separately from the other reconciling items in the reconciliations. The sources of revenue must be specifically described. Next, if the segment doesn't meet any quantitative threshold and it doesn't meet any aggregation criteria, then but also if the management judges that the operating segment is identified as reporting segment in the preceding financial year but not in this current financial year, then it can be disclosed in the current period separately. Next, if the operating segment is, we have the vice versa case from the previous point. If the operating segment is identified as a reportable segment in the current financial year and not in the previous financial year, then it can be stated as a reportable segment and all the previous year figures can be separately disclosed if discrete financial information is available to us and the costs incurred in developing the information or tracing back the information is not excessive or and not detrimental to the entity. Now, as we have seen, there are many big entities which may have n number of reportable segments, but due to the fact of conciseness and for not seeking any confusion, there has been a practical limit to the number of reportable segments that an entity separately discloses. Here, there is no mandatory figure by the standard, but it recommends us if the reportable segments exceeds 10, then we can reconsider how many of them to be disclosed separately or clubbed together. Next, coming to the disclosure requirements, the business activities, we must disclose the business activities which enables the financial users to tell us about its nature, its financial effect, and the economic environment it operates in. It has three more categories: the general information, as described in the paragraph 22, which will be covering up in this session only in the further slides. Information on specified segment revenue and expenses, segment assets and liabilities, and basis of measurements, which will be covering up further in the measurement topic. And similarly, reconciliations must also be separately disclosed. Amounts of reportable segment must be reconciled with amounts stated in the entity's balance sheet, which we will be covering up in paragraph 28. Now, Coming to what general information must be disclosed. First, the factors used in identification of reportable segment and the basis of the organization must be disclosed. Second, the sources from where each reportable segment derives its products and services, the revenues it derives from its products and services must be disclosed. Next, even if the following two information is not separately included in the report to CODM, these must be disclosed, which includes any investment in associate and joint ventures by the entity, or any additions to non-current assets other than those specified. The specified ones include financial instruments, deferred tax assets, and rights arising under insurance contracts, and etc. Next, what are the factors which must be included in report to the chief operating decision maker? First, revenue from external items. Second, inter-segment revenue. Third, interest revenue. Fourth, interest expense. Fifth, depreciation and amortization. Sixth, material items of income and expense. Seventh, share of profit or loss in associate and joint ventures of the entity. Next, income tax, expense or refund, and last, other material, non-cash items. Coming up, we have an illustration. ABC Limited has 5 operating segments, namely A, B, C, D, and E. The profit and loss of respective segments for the year ended March 31st, 2012 are as follows. Would anyone of you like to try and state which of these will be reportable or not?
BCDE will be reported.
Yes, sir. It's correct. Reportable segments will constitute B, C, D, E, and segment A will not be reportable. Let us understand how. In compliance with Ind AS 108, the segment profit or loss. We have an opportunity still. Weber, would you like to explain?
Positive somewhere, positive figures somewhere that's 75, 84, 84, 83, 88 something like that, and negative figure around 6800. According to that positive respectively upon 10%
Yes.
EPCD.
Yes. They all meet the 10%. They all pass the 10% test. Yes. So as Vaibhav said, in compliance with Ind AS 108, the segment profit or loss of respective segment will be compared with the greater of the following. Here, I must stress on the fact that we will not be clubbing both the profit and loss together. All the profitable segments will be calculated separately and the loss-making segments will be calculated separately. Here, A, B, E have reported profits which total 8,280 crores, while C and D contains 6,800 crores in aggregate. Now we must see the maximum of the above, which is the profit amount. Based on the above, we will then individually check each reportable segment if their profit or loss in absolute terms exceeds 10% of the maximum amount stated before, which is 8,280 crores. So the following table has been listed. Segment A will not be reportable because it is below 10%, and rest all the segments B, C, D, and E pass the 10% test.
But then that will be reported as other segment.
Yes, they will be included as other segments and not specifically disclosed in a separate line. Now coming up with another illustration today, X Limited has identified the following components. We have different segments, different revenue, external and internal, profits, and asset amounts. Here we have the only difference from the previous illustration is in this we have to see all the 3 quantitative threshold criteria being met or not.
बताओ कौन जवाब देगा? Pharma, FMCG and others. क्या भाई क्या है तेरा आंसर?
Now,
लॉजिक
external revenue.
या ऑनलाइन पार्टिसिपेंट्स को सुनाई दे रहा है क्या? आप बोलो.
First of all, we have to go by the external revenue that is given here. The total of the entities while around 1 crore 8 lakh rupees. The pharma accounts for nearly 97 lakh rupees. So total, so it meets the 10% addition criteria. The revenue itself. And if you look about the profit and assets, then also it's satisfying the criteria of 10%. That is out of 30 lakh, it is accounting for 20 lakh rupees profit. Out of 90 lakh, it is accounting for nearly 55 lakh rupees of assets. So pharma is being audited as a separate segment. Then if you go by FMCG, then it has no external revenue. Internal revenue is only 4 lakh out of 45 lakh. It is less than 10%. Then if you go by profit, then it is again less than 10%. Then 3 lakh rupees. So 2 lakh 50,000 and 90 lakh rupees. It is the 25 rupees is satisfying the asset criteria, which is more than 10%. FMCG is also reported, and Ayurveda is not satisfying any criteria out of the three, so it will not be reported. And others obviously will be reported.
सही क्या एक्सप्लेन इसने?
इसने एक एरर
क्या?
किया।
हाँ वो एरर क्या की है बताओ आप.
किसका होगा सम? एक्सटर्नल प्लस इंटरनल
दोनों.
चलो. इसका मतलब स्पीकर भी अच्छे से सुन रहे हैं आप बता. ऐसे सीरियस डिस्कशन नहीं होता रहना चाहिए, थोड़ा बहुत कुछ So now you can continue.
Thank you, Harsh. Now let us see the
Harsh
quantity.
नहीं, विराट. ठीक है.
Now, as Harsh stated, we have to again apply the quantitative thresholds criteria one by one to all the segments and all the three criteria separately. As stated, we can see segment pharma would separately be reportable because it meets all the three criteria. That is the segment assets, the profit or loss criteria, and the segment revenue, which is in fact both total of internal and external revenue. Next, coming up, FMCG segment does not satisfy the revenue and profit, but does satisfy the asset test. As I have stated earlier, it is not compulsory to meet all the three criteria for an operating segment to become reportable. It is enough if it meets any one of the criteria. At last, Ayurveda segment does not meet any threshold, but it may be not classified as reportable segment. But can any one of you tell us the fact why they have reported Ayurveda differently as a reportable segment, even when it does not meet the 10% test in any of the
Totally different. From being an FMCG company to a pharma company, being an Ayurveda or specializing in Ayurveda is a totally different business. In according to that criteria, it is being chosen. Not going by the quantitative, but by the qualitative aspect.
Absolutely correct. Now here both arguments can be included. First is absolutely the 75% criteria, which is if the reportable segments do not the external revenue of the reportable segments specifically do not constitute 75% of the entity's revenue, then even those segments which are not reportable can be disclosed separately as a reportable segment. And second, as Gitan stated, if the management feels that the Ayurveda segment is different and it is important to be stated separately to enable the financial users for better utilization of the financial information, then also the Ayurveda can be separately disclosed.
So you mean to say that for the qualitative
Yes.
purpose, they can even report a segment which is less than 10%.
Yes.
So Aditya ji, what is your view on this?
Can you repeat, sir?
So basically, there are two criteria that why this Ayurveda segment has. One is that if it is not if all the reported segment does not cover the 75% of the total revenue or total assets, then it should be reported. Another is that even if some segment is less than 10%, and if the management feels that as a qualitative aspect, it should be reported, then can a company report the segment like in this case?
So in my view, they can report because they may want to convey to the stakeholders that in this particular line of business, what is happening. And they may have a particular interest in disclosing that.
Correct. So our expert has confirmed the view of our participants.
But I just have one doubt. Wherever we are saying revenue, somewhere here we are saying percentage of segment sales to total sales. Are we still saying it as gross revenue or net revenue?
It should be gross revenue.
Yeah, because I have one peculiar case where there are typically very high returns from
Even the
segment.
intercompany transactions as the part of total gross revenue. Yeah, Aditya, please.
So what I have a peculiar case where this particular segment, we have seen that there are significant returns, sales returns in that particular segment. So what happens if I take gross, it could be part of the segment, but if I take the net, it is not part of it.
No. So far as sales returns are concerned, this should not be treated as part of the part of the overall revenue for the purpose of computing these thresholds. But so far as intercompany sales are concerned, these should be taken as part, because ultimately sales return is not the sales for that particular segment or for that particular company as a whole.
Correct.
Yeah. You can continue.
Moving on to the next slide. Now we come to a case study about the
कोई आया नहीं?
सर हो गया
You are connected. Kruti के नाम से.
Yes.
I think you are there. ये आ रही है, मेरे आ रही है. So can you all please confirm? As I think ये आ तो रहा है. ठीक है. You can start it. You can continue.
So coming up to the case study, which is related to Indian Accounting Standard 108. This is about Mahindra Holiday Resorts India Limited, MHRIL. The petitioner is a member of the MHRIL. The member here has to pay an annual subscription fee and a recurring one-time membership fees and recurring annual subscription fee. And in return, the member gets 1 week's free stay of vacation at any of its resorts, but has to pay separately for the food and beverages it has consumed during the stay. Here, the petitioner has alleged that he was not given a 1 week stay and has also pointed out some accounting loopholes, which states that the consolidated financial statements of MHRIL does not have any operating segments related to annual subscription fee, vacation ownership, food and beverages, which are the main operating segments of the parent company, and separate line disclosure of the same would enable the financial users of the entity to take better decisions by the stakeholders. In return, MHRIL has also reported that because of there are also FITs members, which is free inward travelers, which is basically the non-members. They also get to stay at their vacation homes when any member has not availed this facility during the period. Here, some serious loopholes in case of consumer protection and accounting issues have been brought forward by the petitioner. The latest judgment has been passed on 18 January 2023 by the Delhi High Court. Taking forward the judgment same, NFRA has also come to the judgment that there has been some serious loopholes in the accounting practices of the MHRIL by not implementing the Ind AS 108 while formulating its financial statements. It has directed MHRIL to again reconsider its decision and restate its financial statements by June 30, 2023, and also additionally directed the statutory auditors of the MHRIL to comply the same and give a separate report by 31st July 2023. Both of the reports must be submitted individually to the NFRA, and then further proceedings will then go on. And if there has been any serious malfunctioning, then the punishment and fine may apply as deemed proper by the NFRA. These have been the case facts of the case till date. This case is still ongoing. Thank you, everyone. Now I would like to call Shruti so that our discussion can continue.
Yeah. So Aditya ji, anything to add from your side?
No, I had that question on revenue which I've asked, sir.
Good afternoon, everyone. I am Shruti Agarwal. अभी तक हमने जितना भी Ind AS 108 डिस्कस किया है, अब हम उस पर कुछ क्वेश्चंस डिस्कस करेंगे. अभी तक के डिस्कशन से ये तो क्लियर ही होगा कि Ind AS 108 डिफिकल्ट बिल्कुल भी नहीं है.
Yeah.
जैसे
So Shruti, we have some participants from RGN Price, Bangalore and Chennai also. So please speak in English.
So we'll be discussing some FAQs in the form of case studies now to discuss what we have already learned up until now. So first, going on the frequently asked questions. Now there are basically 3 steps that we have to follow while adopting Ind AS 108. That is, first we have to identify the operating segments. Then out of those operating segments, we have to identify the reportable segments, and then the disclosure is required. This might seem that it is a very simple disclosure, but as Sir said, FRRB has issued some guidelines and made some observations that companies are not able to follow such disclosures. And as Yash mentioned, NFRA also issued certain guidelines. So let's go through some case studies. ABC Limited is a company. It has segments A, B, C, D, E, F, G. You will have to answer these questions. So please be carefully.
So
External.
online participants also be careful and they can answer in message box.
Now, external revenue for each segment is 10 crores and internal revenue is 4 crores. For segment B is a startup operation. Segment C has external revenue amounting to rupees 1 crore. Segment D is the company headquarters and the income for this segment is 7 crores. And these activities are regularly reviewed by CODM. For segments A, B, and C, the activities are regularly reviewed by CODM. Unless otherwise stated, all the activities are being regularly reviewed by the CODM and discrete financial information is available. Now we have three conditions for any segment to qualify as an operating segment. The first condition is it has to incur expenses and it may earn revenue. The second condition is that it has to be regularly reviewed by CODM, and third condition was that discrete information should be available. Now coming back to our segments, segment E has internal revenue amounting to rupees 8 crores. Segment F is the Employee Gratuity Assurance Trust, and segment G is a discontinued operation. And that is, it is not accepting any new customers, but whatever customers it has up until now, those services will be taken care of till the expiry period, and it has external revenue amounting to rupees 5 crores. Now, A segment very clearly is an operating segment. Rest B to G you all have to answer. For segment B, is it an operating segment or non-operating? Why?
Because we have for explanation to condition one that was explained by Vanshika Jain. It is not necessary for a segment to be reported as operating segment. It is earning revenues or not, but it is incurring cost and it can be identified separately. It has to be reported as a separate segment. So there is an example also of startup operation. So,
Absolutely right. Ind AS 108 states that a segment may earn revenue. It states may, therefore segment B is an operating segment. Coming on to segment C, is it an operating segment? Yes, no? How many no's? It is not an operating segment. Why? Why is it not an operating segment? Okay, and how many yes? Rest all yes, if not no.
Or less. Rest of are even either not able to understand or yes. Yeah, not able to understand.
not to be reported.
Not to be reported. And you are saying it is not an operating segment. And it is an operating segment. Why? Revenue generate हो रहा है, and we said that unless otherwise stated, all other conditions are being fulfilled. Harsh is saying it is not an reporting segment. The question was whether it is an operating segment or not. We have to clear our basics here. Operating segment is a broader term and reportable segments is a narrower term. All operating segments cannot be reportable segments, but all reportable segments have to be operating segments. Okay, coming on to D.
फाइनल में यही सवाल आएगा.
D. Income being generated for 7 crores and activities also are being regularly reviewed by CODM. Will it be an operating segment? Yes? It is company headquarters and it is written income is 7 crores. Nowhere it is written that revenue is 7 crores. We all should understand the difference between revenue and income. Can anybody explain what is revenue and what is income? Revenue versus income. Very basic. Sorry. P&L. Whenever we make P&L, what is the first heading? And then other income. Revenue from operations. हम दूसरी जगह other revenue क्यों नहीं लिखते? Operating activities, right? And company headquarters में we have written income over here. That means it is income from FD investment or other nature that is incidental.
See,
Not main operation.
Yes, Aditya.
see, when we say income, typically we understand income as the gross revenue minus expenses. Am I correct?
Sir, as per India's so
Yeah, yes.
sir, as per India's 108, we never measure the income, or there is no specific definition being given that income is equals to our revenue minus expenses. Revenue minus expenses or total income minus expenses will give us profit or loss. We will not say that it is our income. Income
Good.
here means other income,
That
which
would
is
be
not
the,
operating in nature.
I got it. Finance related.
Yes, sir. Finance or investing related.
So,
So basically, they are the other income, other than the income
Revenue
from
from
operations.
operation.
Revenue from operations, not income from operations. So see, ये बहुत क्रूशियल चीजें होती है जो आप ड्राफ्टिंग करते हो या आप कहीं पे भी अपने फाइनेंशियल स्टेटमेंट्स में कुछ लिखते हो तो वर्ड क्या यूज कर रहे हो दैट इज वेरी वेरी इंपॉर्टेंट.
Coming on to segment T, is it operating or not? Please answer.
So I think online participants are active or not.
It is operating by we are generating revenue. Correct. Coming on to segment F, employee gratuity assurance trust. Why?
Because it is not related to our operations.
It is not related to our operations, and India's 108 clearly states that whatever trust or defined benefit plans we have taken for the benefit of employees will not be treated as operating segments. So, is correct? Coming on to segment G, is it operating or not?
Yes.
Reason, it is discontinued, still generating revenues. Till the time it generates any amount of revenue, it will be an operating segment. So as we discussed, D and F were not operating segments, rest all were operating segments. Coming on to another example. Again, you have to identify the operating segments among these. Segment A has external revenue amounting to 10 crores, internal revenue 4 crores, operating results regularly being reviewed by CODM. I'll answer this. This is an operating segment. Next. Coming on to next segment, external revenue 10 crores, internal 4, operating results being reviewed by CODM on discretionary basis.
Yes.
Is it operating or non-operating? Operating by? What were the three conditions? Harsh said reviewed by CODM. Was it reviewed by CODM?
I've never said reviewed by CODM.
What did you say? What was the second condition? It should be reviewed by CODM. Is he right? It should be reviewed by CODM. Is that it? On regular basis. And here it says that CODM is reviewing the segment on discretionary basis. So this is not an operating segment. Coming on to C. Anybody besides her should answer this now.
I'm not asking a answer. I'm asking a doubt. I have a doubt. We'll talk about three conditions that are need to be satisfied. The operating segment is the or between three conditions or and.
All the three conditions should be satisfied. It be on revenue and incur expenses. May incur revenue. May earn revenue and incur expenses. Clear? Segment C, is it operating or not?
Yes.
All the three conditions are being fulfilled, but here it is saying that revenue information is regularly reviewed by CODM, whereas the condition states that the operating results should be reviewed by the CODM.
Operating results means revenue and expenses. Here we are saying only revenue information is being reviewed. Is it an operating segment or not?
Yes, answer.
What assumption are you talking about? Everything is clearly stated here. Reviewed, but the statement here clearly states that revenue information is regularly reviewed. Negative revenue.
Not reviewed. ये कहा.
देखो तुम्हारा फाइनल में आंसर गलत हो जाएगा.
Is it an operating segment or not? It is not an operating segment because only revenue information is being regularly reviewed. Coming on to segment D. Same as C. But don't you think that the amount of cost of same material?
कोई तमिल में कुछ
Okay. So in segment D, it will be considered as an operating segment because cost of sales here is an immaterial amount. So it being not reviewed by CODM does not make any difference. Discrete information should be available. Now, the second condition, operating results should be regularly reviewed by CODM. Okay, now coming on to second FAQ, this is about the quantitative threshold. What all revenue should be considered while calculating quantitative threshold? We have 5 segments here, 3 of which are operating and 2 are non-operating. Information regarding external and internal revenue from each segment is provided here. Now I have to calculate the quantitative thresholds to determine whether this operating segment is reportable or not. Which all revenues will I include in determining the threshold limit?
So articles who are there at Oswal Cables and Purvi Khator, please answer. In the meantime, you people also can discuss. Yes, I think let's not have that much of discussion. Answer है तो बताओ.
Which all segments will be considered for calculating revenue? All. What did the conditions say? Revenue from all operating segments have to be considered. So C and revenue pertaining to C and D segments will not be considered for calculating the quantitative threshold limit. Whenever
before you start with this, we have partner RGN Price Sanjay also. Sanjay, are you there?
Yes, sir, I'm there. I'm here.
Yeah. So in fact, I just noticed that you are also there. So welcome to our Saturday webinar, and thanks for attending.
Yeah, thank you, and it's a pleasure being here. I can see all the efforts that have gone into all the PPT, so it's actually a pleasure being part of this.
So, Shruti, please, you can
fact that I have to remember while calculating quantitative threshold limits is that every time Either be it revenue or assets or profit has to be considered only for operating segments. Non-operating segments will not be considered to determine the quantitative threshold limits. Now, third, in this you have to determine what are the reportable segments. Out of these segments, which are the reportable ones? If you need help with the calculation, I have another slide. I just need the name of the segments. A, B, C, D, G were operating segments. Total revenue for segment A was 15 crores, segment B 2.5, segment C 1, segment D 1.5. Segment G did not earn any revenue, but it was still an operating segment. Why? In spite of not earning any revenues,
Other two conditions.
other two conditions, or it may incur revenue. Okay. Now, which all segments are reportable segments? A and B. Out of all these segments, if I only report A and B, is my disclosure complete? Reportable segments, if I only report A and B, is my reportable segment disclosure complete? Yeah. Other में आ जाएगा. Reportable में I have to make separate columns for reportable ones. I am asking whether only A and B need separate columns. Yes. Yes. Now, besides quantitative threshold limit, another condition that had to be checked was the 75% criteria. Whether external revenue for those reportable segments constitute to 75% of the entity's revenue. Please check here if it is being fulfilled. Then do I have to report more segments? And if I have now A and B were already reportable segments as per the quantitative threshold limit. Now I have three operating segments left, C, D, and G. Out of these, I have to take one segment because my 75% criteria is not being met. How will I decide whether I should include C, D, or G in my reportable segments? Does Ind AS 108 state anything about this? Random basis, because it is management's discretion. Ind AS 108 is all about how the management views the entity. If management think that segment G, in spite not earning any revenue, still has to be reported because it may earn revenue or it may be useful for the financial users of the financial statement, it can report G. But it will have to report another segments also, because still, even after including G, my 75% criteria will not be met. Now, another question. An entity has three operating segments. Each segment uses different measures of profitability. Segment 1 uses EBIT approach, whereas segment 2 and 3 EAT approach. The CODM reviews the data for segment 1 on EBIT, whereas segment 2 and 3 on EAT. My question is, while calculating the threshold limit for profit and loss, I have to take a profit. Will I take EBIT or will I take EAT? It has to be consistent for all three. I cannot compare EBIT with EAT. What will I do while determining my quantitative threshold limit? Will I take EBIT or EAT? Why?
Entity of like segment.
That reason is also correct, and the other reason can be EAT will come only after I have determined the EBIT. So EBIT information is available for all three segments, whereas EAT information is not available for segment 1. So EBIT criteria will be used to determine the profitability criteria. Now coming on to our next topic, measurements and reconciliation. I have a question for you all. If an entity maintains its books of accounts on accrual basis, but the CODM sees the information available to him on cash basis, can I make my disclosures on cash basis? I can. Ind AS 10 states that all Ind AS 108 का core principle यही है कि I am viewing the entity with the eyes of management. So if the management is reviewing the entity on cash basis approach, I will use cash basis in my disclosures, but I'll have to reconcile that amount. I'll have to give a reconciliation between my cash basis and the accrual basis. So management uses whatever way, be it cash basis or any other way that management deems fit, it will have to provide a reconciliation to match with the financial statement. And that is ultimately my disclosures will match my financial statements as prepared as per Ind AS. Now, as I stated that the amount of each segment item reported shall be the measure reported to the CODM for the purpose of making decisions about allocating resources to the segment and assessing its performance. The example I just gave, that accounting on accrual basis is being followed for while preparing financial statements. However, CODM reviews operations on cash basis. In such case, my financials will be prepared on accrual basis. My disclosure for Ind AS 108 will be prepared on cash basis, but I have to give a reconciliation to match my cash basis transactions with my accrual basis transactions. Now reconciliations, I'll have to give reconciliations for these following: revenues of the entity, profit and loss, the assets, liabilities, and any material amount. So all the items affecting my balance sheet and P&L will have to be reconciled if there is any difference, how the financial statements are prepared and how the CODM reviews the entity. Next, this is a question for you all. An entity uses the weighted average cost of formula to assign cost to inventories and cost of goods sold for financial reporting. But reports provided to CODM are based on FIFO method. Which cost formula should be used?
FIFO.
Now, my reports in internal reporting is being done on two bases: weighted average cost formula and FIFO formula. But finally, reports to CODM are being provided on FIFO method. Therefore, Ind AS 108 disclosure will be made on FIFO basis. Coming on to entity-wide disclosures. Now, if there is an entity and it has only one operating segment and one reportable segment, are there any disclosures needed? Are there any disclosures needed?
Yes.
Segment disclosures will not be needed, but entity-wide disclosures stating that there is no particular reportable, there is only one reportable segment and one operating segment needs to be disclosed, and other entity-wide disclosures needs to be reported. There are three particular entity-wide disclosures. First is about product and services, second is on the basis of geographical area, and third is basis on the customer. Now, information about products and services, I have to give information about revenue from external customer being generated by each and every product and services. That is, I have identified 4 segments on the basis of products and services. I have to give I have to give the disclosure regarding revenue from external customer generated for each such product and service. This is there any exemption to this disclosure? It is written right there that entity, if the information is not available or the cost of development of this information is too excessive, then an entity may choose not to report this. However, this scenario seldom happens and entity always has the information regarding the products and services because it is operating. Coming on to our next disclosure, information about geographical areas. Now, two disclosures need to be given to geographical areas. One is for revenue from external customers and other is regarding non-current assets. Now, geographical area disclosure needs to be bifurcated into country of domicile and other countries. Information about major customers. I have to report and disclose my information about major customers, and that is if the entity is earning revenue more than 10% from a single customer or a group. Now, what is to be disclosed in this disclosure? The entity should disclose the fact that is that there is an entity is earning revenue from a single customer more than 10% of the total revenue. The amount of revenue from each such customer, if there are more than one, should be stated, and the segments that are being affected from such revenue should be disclosed. The identity of customers should not may not be disclosed and the amount in each segment need not be reported. Coming on to our next question, ABC Limited has 21 segments. Can I report all these all segments meet the criteria for reportable segments? Can I report all these 21 segments? Yes or no? Why yes?
The skill recommendation in that if there are more than 10 segments, reportable segments, then we should be concise. Segments to be reported.
Ind AS 10, he's partially right. Ind AS 108 does not clearly state that more than 10 cannot be reported. It suggests that more than 10 should not be reported. So if an entity chooses and believes that 21 segments will be useful for the users of financial statement, it can report. However, in practical sense, such over-reporting need not be done and 10 reporting segments are sufficient. Now, my last 7 segments.
But is that because if only 10 are reported, then it will be the criteria of 75% threshold. So what they should do is that till 75% threshold, suppose 13 segments meet that criteria, then that reporting can be done.
Now, my last 7 segments, they all meet the aggregation criteria conditions, but the management chooses not to aggregate them. Can it do so? What were the conditions for aggregation criteria? On what basis was aggregation being done? Now, first of all, are we talking here about aggregation of reportable segments or operating segments? Aggregation of? Operate. Who all are saying reportable? Reason?
Initially, you said there are 21 reportable segments.
Can all reportable segments be operating? Statement still holds true. Here we are aggregation for operating segments. Now, can aggregation of all these are meeting the conditions, but the management chooses not to aggregate them. Can it do so? What is the main idea behind this Ind AS? Management discretion through the eyes of management. If the management decides not to aggregate these, in spite the conditions being fulfilled, if it believes that separate disclosure will be useful for the users of financial statement, it may not aggregate them. Now another question. The management of Adani Limited is of the opinion that certain operating segments be treated as non-reportable in nature, since its operating will be seriously prejudicial to the interest of the company. The management concludes that Ind AS 108 allows reporting of operating segments do not meet quantitative thresholds as per management discretion, and the core principle of Ind AS 108 is to let users view the entity through the eyes of management. Can segment information be omitted from disclosures as per management's contentions? Why?
From the bird eye view or the management view, it is actually considering that particular segment, but intentionally ignoring that. And from a full disclosure view, that would not be a thing which should be covered.
Correct. Ind AS 108 does not allow any exemptions in this regard, and that is if entity believes that it is prejudicial to the interest of the company or it will affect the market value of the company, it cannot choose to omit the disclosure on its discretion. All the disclosure needs to be there. Next, XYZ company outside the scope of Ind AS 108 decides to voluntarily disclose segment information. However, the management of XYZ wishes to take exemption for certain disclosure requirements. The management asserts that since the company was not obligated by any statute to comply with Ind AS 108, it can disclose information as it deems necessary. Is the management right in doing so? Why?
Comply with the Ind AS, you have to comply in full manner. When can it take partial exemptions from the Ind AS?
Right. If the entity states in its financial statements, the heading of the disclosure is as such Ind AS 108 of segment reporting or segment information, then it cannot take any exemption. However, if the entity ignores that line and does not mention AS 108 or segment report in its financial statements, it can take exemption. Because in that case, the entity is not stating that it has complied with Ind AS 108. If the entity states that it has complied, full compliance is necessary. Next, FSP Corporation, a US domiciled reporting entity with operation in 25 countries, has determined that it has two reportable segments, US and international, and that is long-lived assets or non-current assets located in two individual foreign countries, England and China, are material. For which geographic area should FSP Corp disclose non-current assets? We have two disclosures now, segment reporting and entity-wide disclosures. In this question, please tell me segment disclosures need to be given for which segments and entity-wide disclosures needs to be given for which segments? Which countries? Segment report is prepared for reportable segments. I have two reportable segments here, US and international, which means US and other countries. So in my segment report, only two segments will be shown, US and others, whereas in my entity-wide disclosures, which requires that I give revenue and asset information for country of domicile and other countries, two more countries which are material, and that is England and China will be included. Next, this is the reconciliation statement being prepared by Infosys for the annual year, for the financial year 22-23. Here we can see that reconciliation is done, and in the objective behind the reconciliation was if the CODM uses any other approach, it should reconcile with the amount being shown in my financial statement. So here we can see that the profit before tax is 33,322. And in my statement of P&L, the profit here is 33,322. So it is being reconciled. Now, as sir mentioned at the beginning of the class, FRRB issued some guidelines. Whatever we have studied up until now, it is very basic. Only disclosures need to be given. This is an index based on disclosure requirements. So, what do you think are the observations reported by FRRB? Very basic information still not being followed by companies or not being disclosed by companies. Identification of operating segments.
What is FRRB? ये FRRB बोल रही है क्या ये? Financial Reporting Review Board.
Right.
Financial Reporting Review Board of ICAI. So basically एक बोर्ड है, ICAI का एक अलग से बोर्ड है जो कई सारी कंपनीज का वॉलंटरली एज वेल एज फॉर सम अदर रीजंस फाइनेंशियल्स पिक करती है और उनको रिव्यू करती है. आई एम ऑल्सो मेंबर ऑफ FRRB. तो कुछ फाइनेंशियल्स मेरे पास भी आते हैं और मैं उनको रिव्यू करके और इंस्टीट्यूट को भेजता हूँ. दैट इंस्टीट्यूट टेक द एक्शंस अकॉर्डिंगली. तो जैसे पीयर रिव्यू बोर्ड है वैसे ये क्वालिटी रिव्यू बोर्ड है. क्वालिटी रिव्यू बोर्ड सेक्शन 28 ऑफ चार्टर्ड अकाउंटेंट एक्ट के थ्रू है. तो वो कुछ स्पेसिफिक ऑडिट्स को रिव्यू करती है. NFRA भी रिव्यू करती है ऑफ द फाइनेंशियल्स एज वेल एज हाउ द ऑडिट हैव बीन डन. सो ये सारे इंडिपेंडेंट रेगुलेटरी बॉडीज है जो कि फाइनेंशियल स्टेटमेंट्स का रिव्यू, जो आपने ऑडिट किया उसका रिव्यू, ये सारे काम करते हैं. एंड देन सपोज कहीं कोई डेफिशिएंसीज आती है तो दे टेक द सुटेबल एक्शन अगेंस्ट द जो भी उसके और ऑडिटर. Yes, continue.
Now, observations reported by FRRB were as basic as wrong identification of operating segments. Some entities were applying criteria for reportable segments to determine operating segments. They were using the quantitative threshold limit criteria to determine the operating segments. Can it do so? It cannot. Operating segments is very basic and it should fulfill three criteria. What are those? It should be on your table line.
In the expense or revenue segment, it should be defined as
Discrete financial information and disclosures such as entity-wide disclosures were not being given by entities, reconciliations were not being provided by entities. So even we all should keep in mind that when we go for audits, we all look for these disclosures, whether an entity is identifying operating segments on proper basis, what is the criteria being used to identify the reportable segments, and all the disclosures, be it segment report or the entity-wide disclosures, are being made by the entity. Coming on to comparisons between IFRS 8 and Ind AS 108. Now, there are not many differences between IFRS 8 and Ind AS 108, just that IFRS 8 states the transitional provisions. In Ind AS 108, in Ind AS, all such transitional provisions are being mentioned in Ind AS 101, which is for first time adoption, and only different terminology. For example, balance sheet is being used by us instead of statement of financial position. That means everything mentioned in IFRS 8 is converged with Ind AS 108. Coming on to comparison with AS 17, as Sir and Vanshika mentioned in the very beginning, what is the idea behind AS 17? Like, the idea behind Ind AS 108 is viewing the entity through the eyes of the management. What is the idea behind Ind AS 17? Sorry, AS 17. It is based on risk and return approach. Ind AS 108 does not consider risk and return approach. The next comparison between Ind AS 108 and AS 17, Ind AS 108 requires that the amounts reported for each operating segment shall be measured on the same basis as used by CODI. And AS 17, we have to use the measures as being followed in accounting policies. That means if my financials are prepared on accrual basis, my segment disclosure also needs to be prepared on accrual basis. However, Ind AS 108 mentions no such condition. Next, Ind AS 108 specifies aggregation criteria for 2 or more segments, and no such criteria is mentioned in AS 17. Does anybody remember the aggregation criteria?
Other than us. I am saying that everybody remembers other than us. Harsri.
Products and services, operational products and services, geographical areas and customers. No, that was the entity-wide disclosure. Yash had mentioned five type of conditions. Yes.
Nature of production process, regulating framework, class of customers,
And the distribution process. Right.
So, in fact, आपको आगे आना चाहिए तो एटलीस्ट आंसर, नहीं तो क्या होगा कि समझ ही नहीं आएगा, आपको समझ में आ रहा कि नहीं आ रहा.
Now, we have already discussed this. Does Ind AS 108 require that certain disclosures, mandatory disclosures, be made even if there is a single operating segment? Does it require? Which type of disclosures are those?
disclosure is that the single reporting entity is.
And entity-wide disclosures, which include disclosures about products and services, geographical areas, and external customers. No such disclosure requirement was mentioned in AS 17. Only a footnote was required. Last, Ind AS 108 requires disclosures of revenue from external customers for each product and service. That is our entity-wide disclosures, and such disclosure was not required in AS 17. Now, just one more topic which is not covered in PPT, the prior period adjustment. Few questions you all will answer. Okay. I have a reportable segment. It is reportable for this year, but it was not reportable for the previous year. Do I need to restate my previous year figures? In the disclosure, when I give the comparative information, do I Suppose, for example, A, B, C, D were reportable segments in previous year, but this year A, B, C, D, E are reportable segments. One reportable segment is added. This was not mentioned in my previous year, so that column will be blank for previous year. Should I restate my account? Restate my account? If it is practical to do so, I will restate my figures. Vice versa, there was a reportable segment previous years, but it is not now reportable. Should I restate my current year figures or previous year figures? Right now, previous year, A, B, C, D were reportable segments. This year, A, B, C are reportable segments. There is no D for current year. Do I still mention a D in my segment report and write blank? Or I write A, B, C. I write A, B, C and the D column, which the D segment which was reported earlier, be part of all other segments now. Option 1 or option 2? I gave you two options. Option 1, I should restate the current year figures. Option 2, I should restate the previous year figures. I will restate the previous year figures. Current year D is not a reportable segment for now. So I cannot write D as reportable segment for current year. So I will have to restate my previous year information. That is it from my side. Thank you.
I think to conclude, I request Aditya ji to please conclude today's class as well as say your words of appreciation for all our speakers.
It's a wonderful program, Bhupinder, and I thoroughly enjoyed. And I didn't feel that it's almost 2 hours, 20 minutes that has actually gone past by. And the best part I liked in this program is we are not looking only from the theoretical aspects, but we are looking from the practical aspect as to how do we do this in the audit, what points do we need to see, where such information should be looked at. And since we have taken examples from half a dozen companies, we will now try to get a better understanding as to how this needs to be approached in an audit. And all the speakers did well. Best wishes to all of them. Good work.
Here we conclude so far as our webinar is concerned, and now we shall have our quiz on the Ind AS 108. So we have a practice of organizing a quiz also immediately after the class. So everybody is requested to please join on that. And Aditya ji, if you feel, I can also send you so that your all students can also attend the quiz.
Yes.
Please, you send it to. I am sending you on WhatsApp. So you can just request to all the participants from RGN Prize for.
I will do that.